Good morning, everyone. You are watching a live daily market outlook prepared by Windsor Brokers for Tuesday, 19th of March 2013. Cyprus, of course, remains the main focus worldwide as the problem continues. Yesterday's cancellation of the Parliament's voting for the haircut of the deposits of in the Cypriot banks just prolongs the current agony, with most of the currencies standing in the neutral mode as investors are sitting and awaiting mode to see what will be the decision. Some pressure on the euro was seen this morning on comments of French finance minister that said that the Eurozone wants more transparency in Cyprus banking system. This in favor of only taxing Cyprus bank deposits above 100,000 euros. Is up to Cyprus to decide that Cypriot situation is not contagious, and the Eurozone cannot lend more to Cyprus, otherwise Cyprus debt would become too big. However, the outcome from the voting of the Cypriot parliament, that is still unknown. When some comments saying that is going to happen today, but it could be extended up to tomorrow or even Thursday. The comments coming from the various sources are more or less quite critical towards the decision, as this is a sort of precedent that never happened before and could have a domino effect, despite the comments of recent, what I mentioned, the French financial minister, that the problem is not contagious. Personally, I think that is quite contagious and could be quite dangerous for the future of Eurozone itself. Of course, we're going to see what will be the final decision. Things are now in the hands of Cypriot government and the parliament, and their decision will, I think, write a new page of the history, as this is the thing that happens the first time. The Cyprus has been granted more flexibility from the European Union, and should now safeguard protection of depositors below 100,000 euros. But in the same line, the island will still have to raise 5.8 billion euros in order to complete the bailout, with additional 10 billion euros being given by Eurozone, European Central Bank. The deposits levies on a one-time measure, and the finance ministers of Eurozone favor no tax on the deposits. As I said, the deposits up to 100,000 euro. But as said, ongoing drama is continuing, as yesterday's cancellation, yesterday's vote was cancelled by Cypriot President Nikos Anastasiadis, and the replacing date is still to be confirmed. Some news saying that is due to happen today. At the same time, the Cyprus foreign minister is traveling today to Moscow to discuss with the Russian officials. Overall, we are going to closely monitor the situation. Of course, through our platform, you will be updated with the latest news. As said, the markets are rather quiet following yesterday's Monday's gap lower opening of strong gap lower opening on the euro, as well as dollar yen, and gap higher low opening on dollar Swiss. Euro is slightly skewed towards the downside after being entrenched within the narrow range following bounce of yesterday's fresh low, but the upside so far remains limited, and overall negative tone is still keeping the more focus towards the downside, and more risk for possible further extension towards the downside. We're going to take a look in the technical part about all interesting moments of most of major currencies and commodities. Just to take a brief look at today's calendar, where we have quite interesting data to be released. Starting with the United Kingdom, a series of data, inflation, PPI, retail price index and home price index are due at 9:30 GMT. Inflation yearly for February is expected to tick to 2.8% versus January's 2.7%, while core CPI is forecasted at 2.2% versus 2.3% in January. Producer price index input for February 1.7 forecast versus 1.3 January's release, while PPI output is expected to stay unchanged at 0.2%. Retail price index for February yearly release is also expected to stay unchanged at 3.3%, with home price index expected to dip to 2.6% in January compared to 3.3% in December 2012. Further indicators due to be released and important are zooeconomic sentiment from Germany for March due at 10 o'clock GMT. 47.9 is the consensus, below the February's 48.2, while conversely the Eurozone's one due at the same time is forecasted at 43.7 in March versus February's 42.4, and that's all from Europe's side. Quite a big number of strong and important economic indicators to be released and expected, of course, to affect the market movements. America's start at 12:30, again 1 hour earlier due to the daylight saving time that already started in the United States and Canada. Canadian wholesale sales for January are forecasted at plus 0.4% versus December's minus 0.9% release. Manufacturing sales 0.7%, again positive versus negative minus 3.1% in December 2012. U.S. housing starts for February are seen more optimistic compared to the January's 0.89 million starts and the 0.92 million, 920,000 new houses are expected to be started in February. This is the forecast, and building permits are also higher, 930,000 permits made in February compared to 900,000 in the January. And finally, that's from Americas, and down under New Zealand, the current account for the fourth quarter due at 21:45 GMT is forecasted to show the narrowing trading gap, 2.97 billion kiwis compared to a gap of 4.42 billion in the third quarter. And that's all for today about the economic indicators. We're going to take a look at the major currencies and commodities and see the expectations according to the technical analysis outlook. I've seen already some questions. We are going to answer them at the end of the session. Don't worry, we are not going to miss any of the questions. Let's just continue our job as we usually do, and then at the end we have the time spared for questions and answers, starting with the single currency against the US dollar. Hourly structure is slightly aligned towards the downside as the euro dollar bounced off yesterday's fresh low at 128.79, but still unable to fill yesterday's gap of around 160 points as the pair closed on Friday at 130.70 and opened yesterday at 129.08. It's quite significant that the single currency basically they recovered some 50% of the entire fall from last Friday's peak at 131.06, where the recovery was capped. This is 50% retracement, and also it's close to the psychological 130.00 barrier. So far, recovery being limited there by descending hourly 55 days exponential moving average, and as we can see, beginning of European session, the price ticked lower, approaching the recent range floor that is approximately at 129.20. Overall, a negative tone is still dominating on the both lower and the larger time frames. More evident is on the 4-hour chart, where we have the all indicators in the negative territory and all pointing lower. That overall keeps the pair pressured. Of course, the main pressure came from this yesterday's gap lower opening that keeps focus on the downside as the price reached our initial target 128.75, which is the 50% Fibonacci retracement of larger 120.42, 137.10 rally, and also we have the reinforcement of this support by 200 days moving average currently at 128.66. Overall, quite strong support at this zone, and the break of which is seen as a trigger for a further weakness, extension of the down move from 137.10 yearly peak posted on 1st of February 2013. As said, the negative tone dominates and sees more focus towards the downside, with Cyprus, of course, being the main market driver, especially for the single currency. Any bounce above 130.00 will still require a gain of last Friday's closing price at 130.70. That will fill the bear gap. However, a break above Friday's high at 131.06 and the high of 8th of March 2013 at 131.33 is required to confirm the near-term bottom and the open way for some stronger recovery. That is, according to the current situation, quite unlikely now. Of course, we are, as most of investors, are waiting the decision of the Cypriot Parliament that will give us some more clues. Most likely negative action and negative reaction of the market will be seen upon the release of the decision of the Cypriot Parliament regarding the bailout approval and the haircut, as they call it, haircut, taking money from the banks, from the people that have money in the banks. Sterling remains steady and maintains a near-term positive tone. That is more evident on the 4-hour chart following bounce of 148.30, 12th of March low that nearly fully retraced the down leg from 152 to 148.30 on a bounce to 158.75 so far, where the gains were capped, and the pair entered the very narrow consolidation, limited on the downside, well supported on the downside at 150.70 by ascending hourly 55 days exponential moving average. Basically, the price is currently moving pardon, between 20 and 55 days moving averages, but overall positive tone, as said, on the 4-hour chart still sees room for possible extension higher as the bullish crossover of 20 over 55 days moving averages underpins now the action and sees potential for possible full retracement on a bounce through 151.75 towards 152 and 152.20, also seen as a near-term break point. On the downside, 150.70 is the range floor and offers initial support ahead of a more significant 150.40. That is also significant 150.40. That is 38.2%, and very significant support is at 150, where we have the round figure support in the half midpoint of the entire recovery rally from 148.30 to 151.75, loss of which I would say would be quite bearish and would signal the possible end of the recovery action. Conversely, a bounce above 151.75 as said to open 152 and 152.20. The hourly studies are flat at this point, but the indicators start to point lower. That could be signal of possible cracking the initial 150.70 support and a possible stronger reversal towards the downside. The levels we have to watch are 150.40, 150.00. On the upside, as said, 151.75, 152, and 152.20. Also, despite being in the positive territory, the 4-hour indicators are now slightly descending. That is additional pressure seen on the near-term price action, while overall bearish tone shown on the daily chart is still fully in play and still sees the more potential towards the downside with the current bounce in just as a brief correction, unless we see break above initial 152.20 barrier that may allow for some a stronger rebound and a possible extension higher towards next levels, which are approximately at 153 zone. The next is dollar yen. The pair managed to cover yesterday's gap lower. The price dipped as low as 94.30, and the fresh recovery extended gains to 95.73. So far, this also marks approximately 76.4% of the fall from last Friday's high at 196.24 down to yesterday's low at 94.30, and that was all seen so far. The hourly indicators are positive, but now starting to move lower as the price pulls back down to so far to 95 at 28. 4-hour structure is still negative. Most of indicators are still below their midlines that sees increased downside risk unless we see break above regain of 96 and break above 96. Regain of last Friday's high at 96.24 will be seen as a trigger for shifting focus upside, and looking for a retest of 96.70, recent peak posted on 12th of March, and a possible extension up towards the next target at 97.00. So far, this is the situation in the 4-hour chart. We need to see break above 96 in order to improve. Otherwise, increased risk will be seen again towards the downside levels as a break below 95 level. That is approximately midpoint of the yesterday and to overnight's recovery rally will be bearish. Again, we're talking about 95 zone, which is exactly 50% of the entire rally, and break lower will be bearish again. Descending hourly indicators see potential for some stronger pullback. Ideally, the dips should hold above 95 in order to sustain current recovery and see potential for a further extension higher. Otherwise, bearish break below 95 would reattract levels on the downside where we have 94.80, 94.60, and then finally 94.30. That at the later stage would allow for some again stronger corrective action. Cracking the initial strong support and previous range top at 94.50 zone was seen as initial negative signal, but as the pair managed to cover up losses and fill the gap, again more focus is still seen towards the upside, as daily indicators are quite positive at this point, and see again potential for extension towards 96.70 and then 97.00. Aussie dollar is losing traction at the beginning of today's European session, following yesterday's gap lower opening that dipped as low as 103.42, and then a steady recovery filled the gap and reached 104 psychological, even broke above 104.08, just ticks below last Friday's high, and that was all seen so far as the fresh weakness is now pressing the price lower, as it already broke below the 20 days moving average, and as we can see, the hourly indicators are now entering a negative territory. Main risk will be seen on a break below yesterday's low at 103.42. That is close to 50% retracement of the latest upleg from 102.86 to 104.12. That will risk a further reversal and a signal near-term top at levels just above 104.00. 4-hour indicators are now negative, turning towards the downside, emerging out of overbought zone, all in the descending mode that supports a further extension. As we can see, the price is now attacking the 20 days moving average. Our main support now is at 103.40 zone. This is also seen as a break point, as we have the previous highs here of 22nd of February and the 12th of March. Break below here is to allow for some stronger corrective action of the recovery rally from 101.14 fresh low posted on 4th of March to 104.12 peak of last Friday, and basically break below 103.40 is expected to test first 55 days exponential moving average at 103.26, and then 103, which marks 38.2% Fibonacci retracement. Quick look at daily. That is still positive as indicators broke above their midlines, and the pair sustained the gains above 200 days moving average, currently at 103.60. This is also seen as a quite good support at this point, and now is coming under pressure, holding above yesterday's low, and the 200 days moving average will keep the upside focused, as both other lower moving averages 55 and 90 days have been cracked on the recent extension to 104.12. That marked 61.8% retracement of the down leg from 105.97 to 101.14. Overall, the positive tone is still seen dominating on the larger time frame, and still keeps focus on the upside. Targets 10 break above 104.12 is expected to open 104.56 and then 104.75. And from the commodities, crude oil remains well supported for now. Let's take a look on the 4-hour chart. As a brief break below the trend line, support was short-lived, as the price after dipping as low as 91.17 quickly recovered and regained the previous highs at 93.82, a few ticks higher to 93.91, just ahead of a 94 barrier. That is also marking a 50% retracement of the down leg from 93.86, pardon, 98.63, I do apologize, to 89.35. Positive tone is still seen on the 4-hour chart, and keeps the upside favored for now, as long as freshly established platform at approximately 92 zone, excluding this spike lower yesterday, is now offering quite good support, and holding above this level will keep the upside focused, and break above 94 sees no obstacles until 94.44, which is the 25th of February high, and then 95 zone that marks a 61.8% retracement. Some corrective action could be seen on reversing hourly indicators following overnight's rally to fresh high at 93.93, with the 93.00 seen as initial support that marks 23.6% retracement, and as said, any dips ideally to be contained at or above 92 higher base in order to keep the near-term bulls in play. And finally, the yellow metal that eventually broke above 1600 barrier, but is still unable to sustain gains. Last yesterday's rally higher reached 1611, and then the price action remained entrenched within a narrow 1602, 1606 range. Gold is also awaiting the decision from Cyprus. That will give us some more clear situation about the possible about the further direction. So far, positive tone on the 1-hour chart is still holding the upside focused, while the 4-hour indicators are well positioned for a possible further extension higher, and a break above the recent high posted yesterday at 1611 is expected to open next significant point and pivotal point at 1620 zone, where we have the previous high of 26th of February, as well as 50% retracement of 1684 to 1554 descent. As we can see, the structure is well supported for now, with the 20 days moving average just under 1600 level, holding the downside protected. Also, we have the previous double top at 1600, so 1600 offers quite good support. Any slide below this level would risk a test of 1590 as initial support, reinforced by 55 days exponential moving average, while break below 1590 and approximately 83 will be more bearish, and may risk near-term top at recent high at 16.11. And that's all from my side. As said, we are now opening the questions and answers part. As I said, we already have some questions. Oh, we have a lot of questions actually. So we'll start. Client is asking, is there any problem with the client funds in the accounts of Windsor? So far there is no any signal of any problem or anything like this. Your money is safe and protected. There was someone said that there was no voice coming. From my side, I have everything okay and running. I don't know. You have to check your equipment. Where to buy or sell, you have to be more precise and tell me what to buy and what to sell. Although we don't give the trading advice on this session, but you can find quite good information. As I mentioned in previous sessions in our website, you can find the technical analysis reports with the levels, entry and exit levels, and the suggestions what to do for a number of instruments. This is the webinar is more of information oriented rather than giving trading advice. We should not trade euro or gold. Look, it's up to you whether you want to trade or not, and what to trade. Look, the situation with euro, as I presented, is quite shaky, but a certain direction is shown, and according to the technicals as well as fundamentals that are quite negative for euro, I would say that the downside is still more favored for the single currency. Of course, as we can see, the rather quiet markets are showing that most of investors are awaiting the decision of the Cypriot Parliament, and then they will likely jump into the market, whether buy or sell, depending on the release. But in any case, more negative tone is still seen dominating on the single currency against the US dollar. And there is a question of Dow Jones. We're going to take a quick look at Dow Jones June contract to see how it looks from the technical point of view. Yesterday's gap lower opening has managed to recover the losses, filling the gap and extending as high as 14,447, whereas the price steadies for now, consolidating the recent rallies. Hourly structure is still positive and still sees more potential towards the upside as the price hold above both the moving averages that have also bullish crossover. 4-hour indicators are still in descending mode and still seen pressured unless we see the gain of a recent high at 400,478. That is not far from this price. Then we might be talking about further corrective action. This is again connected to the current Cyprus problem, and I would say the release of the news from Cyprus will give us a more clear direction at this point. As I said, it's quite wise to see what will be the outcome and then make your trading decision. It seems that we have exhausted the questions for today. I would like to thank you all being with us. We'll keep you updating. For our chart, you can use all time frames. In order to analyze properly, you have to use, that's most of analysts are doing. You start with the daily one where you have the big picture, then you move to the 4-hour, hourly, and then you can narrow. Of course, if you are an intraday trader, you can use hourly, 15, 5 minutes, 1 minute chart, depending on your way of trading. But you have to use all time frames in order to have more clear picture, and of course configuration of each time frame shows sometimes different values and different directions. Again, this depends on your preferences and the way you trade. Are you intraday trader, more aggressive or more conservative? But I suggest you use all time frames to have a very clear picture, and then of course you make your final trading decision. I would like to thank you all, and we'll keep, as I said, we'll keep you updated during the day about all outcome and news. We are here on the source of everything, and we will have the news, although it's going to be announced by all media in the world. Everyone is awaiting this decision. We are back tomorrow morning at the same time at 8 o'clock GMT, 10 o'clock local Cyprus time. Of course, in case of anything that may happen earlier, we will make another session, and you can find it. You'll be able to find it on the YouTube like this one. All our sessions are recorded and placed in our site in the YouTube called Windsor Brokers Forex. Until tomorrow, I wish you a nice day, and of course a lot of caution with the markets. Still no decision, still a rather quiet situation, but once decision is made and announced, then we might see some quite strong movements in the market. Until tomorrow, I wish you a very nice day, and of course good luck and in your trading with a lot of profits. Good luck.